Good afternoon. Welcome into a Thursday, December 3rd edition of Market Talk. I'm your host, Jesse Allen. Great to have you here with us on the program today. MarketTalkAg.com. That is our home on the web. It is MarketTalkAg.com. Find us on social media at Market Talk Ag, Facebook, Twitter, Instagram, all those great spots. And of course, on all your favorite podcast sources, including Spotify, Apple Podcasts, iHeartRadio, Radio.com, Amazon, Audible, and so many more. Also, big thanks to our radio affiliates, including KMA in Shenandoah, Iowa, and KASM in Albany, Minnesota, for hosting Market Talk on their websites as well. Well, taking a look at this market trade today, we've seen a couple down days in grains, and now we saw a day where the U.S. dollar tumbles and soybeans lead corn to the high side. Let's talk about it. Our guest today, he is with Total Farm Marketing by Stewart-Peterson. Our good friend John Heinberg joins us here today. John, how are you, my friend?
I'm doing well today, Jesse. I'm doing well.
John, good to hear that, and good to see some green on the board in the grain sector today. After a couple days there where a lot of folks were really starting to worry, saw some end of the month profit taking, it seemed like, but then this dollar comes in today and takes a hit, and next thing you know, soybeans finish up 15 to 16 cents for the most part across the board today, back into that 11.65, 11.70 range. Let's start there and talk about that. What is the impact of the dollar being down today having on this grain market?
That's a very significant move that we've seen in the dollar. I mean, we've been trending lower realistically since the start of 2020, but now here this last week we've broken through our most recent set of lows, and now we're trading at our lowest level since April of 2018. So obviously that makes U.S. commodities a little bit more available to the rest of the world. So that's going to be a story we need to keep an eye on here going forward. If we can't hold this 90 basis point level, actually the low from back in from recently was around 88, we push through that area, there's a chance that this thing could go back to 13, 14 levels in terms of 2013, 2014. And then we're going to really be looking at probably an explosive demand side of the equation that could come into U.S. grains. So that's something that's definitely on our radar. It may be more of a 21 story now than now, but at this stage, when you got a market that's already dealing with potential tight supplies, as well as strong demand, and we got another factor that can lead this market higher, like a weakening U.S. dollar versus the globe, that's definitely going to help out overall in terms of bringing support under these prices.
Well, and looking on the soybean side, especially, I know a lot of producers were starting to get really antsy the last couple of days with the sell-off we saw, and South American weather not really favorable to the markets, not seeing much on the export side. But then, today we get this move higher, and now I wonder, how many producers are sitting out there scratching their heads, wondering, okay, what is this soybean market doing? Is it going to go back up? Is it going to hold here? Where are we going from here?
It's going to be an interesting question. First off, looking at the calendar, it's December now. We're at the end of the year. We got a lot of length in the market. Does the market want to pull some money out? We're a little cautious of that side of the equation and seeing where we go and starting out 2021. But, these last couple of days here, we went down to a level that we thought we would test, which is around the 1140 area. That's back to the November 10th close when we had the report that really kind of sent this market up into these levels. We failed to get through $12. We tried it 3 times here in the last couple of weeks, and with that, the path of least resistance became lower. Then we hit that spot, and the buyer stepped back in and lifted it up nicely with good follow through today. We still got a market that's anticipating a strong demand picture, even though things are slowing down. Export sales today, about 490,000 metric tons last week, another marketing year low, but this is a window we've kind of peaked out those sales, so we're not surprised by that. But considering the fact we're sitting about 85% sold of what the USDA is expecting 8 weeks into the marketing year, the anticipation is that the USDA will likely make some changes to that demand side of the equation and tighten up the supply picture more, as we got a report next week that could happen on, or definitely the January report. So with that, I think we're building a bit of a range in beans, but I would not be shocked if the dollar continues to trend lower, or we get some unexpected demand news, some new additional sales. We go back and challenge that $12 barrier. If we take that out, this market's got some really good potential to really put the gas to it, because I'm not 100% sure we're rationing the bean supply at 1170.
Yeah, and it's something we're going to have to watch, especially the next couple of weeks. You mentioned that report next week. Typically we don't see any adjustments in that December report, but the way 2020 is, John, who knows what we might see next week.
Very much so. And, this is a very typical market that we're dealing with here. And when you're looking at the demand pace that is that strong between what we're seeing in the corn and the soybean market, the USDA is going to have to make some adjustments somewhere along the lines, more than likely. And that's going to be the most logical place that it can probably step in. It doesn't have to be much. 25 million bushels, when you start talking the carryout that we're at, 25 million bushels is a big number.
Definitely. So I know, John, a lot of producers have moved soybeans, not so much on the corn side. We've talked about this before. Corn 2 to 3 higher on the day Thursday. We're kind of sitting still range bound in that 420, 425 range. Although you look out to May, July, 428, 429 on the board. Let's take a look at corn here and talk about this. I know the ethanol margins, they continue to deteriorate with the rebound in corn. But on the future side, things are looking okay. We're holding steady. What are your thoughts on what you're seeing in corn this week?
I really like the corn market here. I actually have been stepping in for producers, getting re-ownership in on some sales, even focusing on that 2021. We had a setback that we needed. I'm going to talk about March corn here a little bit. We got to the 440 area early in the week. We failed there. We obviously saw a big reversal over, and then yesterday it was very encouraging to see the market find a base, turn around, and put what we call a hook reversal back to the upside in. We had some rumor that said China was stepping into the market buying corn yesterday, maybe up to 1 million tons. We'll see where if that number comes out here in the next few weeks on export sales announcements. We didn't get anything today. And if you go look at global corn prices right now, the U.S. is significantly cheaper than Argentina, Brazil, as well as the Black Sea region. So that's going to keep the demand side of the equation, hopping here. Expectations, again, like in beans, that we're going to continue to see that demand side of the market stay strong. Probably see some more upward revisions on the overall demand in terms of what the USDA is expecting on the export front. That's only going to tighten the supply side up even more so. So, we're in a window here. This market's very well supported, and you add in that weak dollar on top of it. That was a nice turn off of an area that I thought we would drop back to around 415 or so. And then we saw those buyers step in very quickly. And realistically, in this market right now, anytime we get a bit of a break, looks like a more of a buying opportunity than it is a panic type sell opportunity.
Well, and I wonder as well, with the corn market right now, especially producers, John, if I have a lot of corn sitting in the bin, look at that March contract, 426 and a half. I mean, if that makes sense for your operation, that would seem like a good spot to at least get a floor underneath you and maybe even sell a little bit or re-own it.
And that's what that's the hard part about this. Everybody wants to see if we can hit a home run in here. You need to stay disciplined to targets and go ahead and make those sales incrementally as the market stays strong. At least, again, build your base. If you're concerned about the downside, keep some cheap put value underneath this market. The puts actually aren't very expensive in those shorter term months, because the more of the money seems to be on the long side of the equation. So at least you got something there in case we get a washout event that we weren't seeing coming. Something changes on forecast, something changes on the demand side of the equation. You got something there. You need to shift that risk off of the market onto paper some form, and let that top side go. Now, if you need to move corn, you need to have some sales in place. Make sure we're looking at those re-ownership strategies and keeping in this market. I've actually done some work all the way out till September this week, and just say, hey, let's throw some time into this thing. Let's let this market really make some decisions for us, and then least sell the value that's here now. Especially if a producer's got corn in storage and you're paying for that commercial storage. Look at the price of the option versus what you're going to be paying in the storage in this window. Cash flow the operation, move the corn, go ahead and take the money that you would spend on holding that out to a July or May window, and you can easily pick up a call or call spread to keep your upside open, and then you mitigate that risk that you have if something rolls over.
John, let's switch over to wheat. Wheat was not as well supported today. And you look at this market, we got the Russia news earlier this week. A lot of those tenders, export tenders, keep going to the Black Sea region. Just taking a look at this wheat market overall, is there much to get excited about right now?
Wheat market, that's going to be a dollar driven play. But again, the global competition continues to be strong. And what's kind of weighed on wheat too, we saw India and Bangladesh put a sale out there. That was about 10 million or $10 per metric ton underneath the price of global wheat. So again, it just keeps solidifying the fact that we've got a lot of wheat out there globally, and that's just going to keep a lid on prices in general. You got Australia back in the production game after multiple years of drought. This year, they're going to have one of their best crops ever. So that's still coming into play too. So it's just one of those ones. It seems like every time we turn around, somebody's producing wheat or somebody's got wheat available to the marketplace. Here in the U.S., we got to keep an eye on the southern plains and the weather. Where are we going to be in terms of acreage for spring wheat and beans come this spring? There's some things that could bring some optimism, strength into that wheat market. Right now, though, charts look weak, even though we've been choppy this week here after the hard sell-off on Monday. Feels like more of a consolidation for a potential break to the downside. So if you're unpriced on bushels, make sure we're moving some of that risk to paper, maybe trigger a few sales in here, at least start making sure you got some floor underneath this market. Now, obviously, we can act totally differently. And if the grains start taking off again, corn and beans, those traders will easily pour money into wheat and move it higher. But lately, it's starting to seem like because of the global situation that they've been buying corn, buying beans, and they've been selling wheat as a hedge against those positions.
John, let's flip over to livestock here and let's touch on the cattle market first. I know a lot of folks I've been talking to the last week or so. They're pretty optimistic about this cattle market and rather excited about what they're seeing there and at least where we're holding the ranges. Although we were down today, starting to see a little bit of activity in feedlot country, but we're still kind of stuck range bound. What is your thought with this cattle market now that we've passed Thanksgiving? We're seeing the COVID spikes. Where do you think this cattle market's going to go? Is it going to be able to break out of this range it's stuck in?
I'm optimistic that it can. Obviously, today was a disappointing day in terms of where the prices went to, and there's a couple outlying factors that we got to take a look at. First off, December cattle options expire tomorrow. The market likes to move to where the most open positions are, and they're all around this 110, 109 area. So anybody sitting on calls and puts that are still open going into tomorrow had to make decisions. Do we get out? Do we take the futures? We just let them fall apart. What do we do? And that brings a lot of selling pressure. We see that in the grains at the same time window when, December corn options start to expire. And then on top of that, we got first notice day next week for December on the 7th. So anybody who's long December cattle needs to make a choice too. Do I get out here or risk the possibility of delivery? So that typically sends the market softer in the next week or so here. So then we see historically we turn it, north into the end of the year and get some strength. So we'll see if that pattern kind of holds together. But, beyond just those things going on today, retail values had a heck of a run. We pushed them up to about 244 in the choice carcass. Now we've slid that back. Today was our second consecutive down day on choice carcasses. So now we got a little bit of demand concern that we've made the run that we needed to there. And then cash trade just can't find traction. Most of the trade this week was around 110, which is relatively steady with the last couple of weeks. There was some smaller packers or regional packers are paid up to 112. But then I even heard at the end of the day down in the south, we got a little 109 trade. So that was disappointing to the market in general. So that just weighed today. We had a nice break back in terms of going down and testing some support. We did bounce a little bit towards the end of the day, so it gives me a little bit of optimism going into tomorrow that maybe we can hold in here and kind of get through this window and then see what cash trade and things do as we move further. I do like the market going forward. I'd like to see February get back into the upper one teens, 117, 18 window, but that might happen after the first of the year.
Well, and that's something we'll have to watch as well. And you mentioned the cash trade. It's really just been stuck in this 110 range for a while, and we really haven't moved a ton. It just seems like we move in little increments here and there. I mean, today, you know, 2,000 head in Kansas, 800 head in Texas, and 500 in Nebraska. But that's kind of on par with what we've seen the last couple of weeks. It's just little bits of light trade here and there, and can't bust out of that range. But I'm with you. It'll be interesting to see what happens the next couple of weeks.
And then following suit too, feeder cattle market was looking very strong. We had everything trading above the 140 area. Talking to people out there in the countryside, we had really good cash trade in some of the auction markets and things of that nature. So that move was disappointing today. Fueled by the weakness in the lives as well as probably the strength in the corn market today. So, you know, yeah, today was kind of a head scratcher. So typically, sometimes you get these head scratchers. They're more of a blip than an actual true trend change. So the key tomorrow will be how do we end the week and where do we go from there? We really need February to hold this 112.50 area. It's kind of a bit of a technical spot for me. If we break underneath there, that kind of opens us up to possibly go back and retest some further support down below.
John, let's flip over to the hog side. Pork, this is a totally different ball game right now, and I mean, we're seeing prices, in this mid 60s to 70 level on the board, but it just seems like we're starting to scale a little bit lower again. Exports, I mean, everything. There's a lot of factors that going into this hog market right now. What are your thoughts here?
Yeah, I'm not a big fan of the market and the way it's been acting. And realistically, we had a pop early this week and kind of poked up in those upper 60s or $70 window. And right now, it's starting to look like any type we get a run, it's more of an opportunity to make a sale or get some defense in versus optimism that we're going higher. We got a lot of hogs in the pipeline. I know I've been saying that for a couple of weeks now, but that hasn't changed. We're still killing them about 497, 95,000 head estimated a day. The weights are still relatively heavy overall, so we get a lot of product moving through the pipeline. Now we are moving that product, so that's encouraging. We talked about export sales. They were fairly solid again this week, so it's good to see that both sales and shipments continue to keep support and get this product out the door. But again, I'm cautious just because of the numbers. It's just kind of overloading the system right now in terms of the market in general, making it very, very difficult for those front months to get anywhere. And now we're getting close to December expiring here on the 14th. We're flattened out with the index, so I don't see a whole lot of movement maybe in that front month. But now we're seeing some of that weakness shift into that February as well as that April contract. So again, right now fundamentals say we're pressured. Maybe we get some technical bounce, but we need something to change this, and some new demand or just some limit. Seeing those slaughter numbers come down would be key, but right now we're just not seeing that.
Yeah, it'll be something to watch here for sure the next couple of weeks. I think with both cattle and hogs, with the COVID spikes, and with the holiday season, and how many people are going to be eating at home, what's all going to happen here with retail demand the next couple of weeks as well. I think it'll just be interesting to see where we end up by the time the calendar rolls into 2021.
Yeah, very much so. And the market's got some optimism regarding the vaccine that could be coming through. We're hearing reports that could be here as soon as the end of the month for some locations and some, groups of people. And,
Hmm.
they'll probably well into the spring before it becomes nationwide availability. But again, that's going to keep some optimism in these markets that, we'll see some decent demand. We're never probably going to come back to where we were before this all happened. And realistically, the retail consumer, at least in terms of the meat market, has changed. They now understand that they can cook a good product at home, and that's still been part of the saving grace that we've seen here. Has been that a shift of that retail consumer not being afraid to walk in the store, buy pork, buy beef, take it home and cook it themselves versus running to a restaurant. So I've got a lot of optimism for both these markets. More cattle market probably as we move into 21, just kind of given what's going on out there. The Chinese situation and hogs makes me nervous if they get back up to where they need to be in terms of production, and we start seeing some of that demand go away. Have we loaded our supply side? So realistically, kind of finishing up that point on hogs. $80 hogs in the summer, $70 hogs in April. Those are starting to look like pretty good levels. Just make sure you start building your floor and hope from there that the market works higher.
Definitely. So, John, any other final thoughts you have for us on this Thursday?
As we get to the end of the year, my biggest concern is what happens if we get some end of the year liquidation. You got a lot of money that's been sitting on long sides of these markets, agriculture as well as the equity markets. Even the energies. We've seen crude oil now trading at it back to the levels we were when COVID became an issue back in March. Do we hit that end of the year liquidation? And that is one thing that keeps me kind of cautious overall, not really making sure that we're focusing on the risk side of the equation here for all these commodities, because we could see a pretty hard washout going into the end of the year. And if that happens, though, I'll be a pretty active buyer going into 21.
Well, John, if folks want to reach out to you and get a little advice on their marketing, what's the best way to do that?
Sure, Jesse, I love chatting with them anytime. Feel free to give me a call at the office, 800-334-9779. or go ahead and shoot me an email at johnh@totalfarmmarketing.com.
John, appreciate the time as always, and look forward to catching up with you next week. Thanks so much.
Thanks, Jesse. Have a great week, everybody.
John Heinberg with Total Farm Marketing joining us here on Market Talk. Find us online, markettalkag.com, all your favorite podcast sources, including Spotify, Apple Podcasts, iHeartRadio, Amazon Music, and so many more. This has been the Thursday, December 3rd edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.